we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though, because you have more liquidity?
It's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets.
Welcome everyone to the Kendall Report. Man, it's Friday and what a day it was, huh? We almost printed STX, RTX, and then STX. We came just short. What a reversal. Sometimes it's funny, I made a comment, I guess we'll call it a comment in the thumbnail that I did last night, saying, is NVIDIA, is this the end of this rally? And boy, was it. I think we learned something about the markets today, which I'll bring in as we go through tonight's stream. It's very disappointing to me that I'm 1 day behind on the database. The database is so important to understand what's likely to happen tomorrow. So I apologize, but we're working on something that would be a little... There's a joke around here called, we want to develop an app called Pocket Bob, and it puts out these stats and some of these things that I talk about every night. So we're working on a little side project. Be really cool if we can get that together. It'll probably just be a web app, not an actual app that you have to download or anything like that. But anyway, could be very interesting project because the accuracy of the database is pretty amazing, actually, and you'll have to admit it's been really spot on. And it's so let's talk about a couple things here, folks. Just reminding you, and a lot of you have been actually stepping up. The indicator package is going to go off discount on the 31st is the final day of that. So the 1st of September will be on some new pricing and stuff, so make sure you get them, just save the money. There's a fair amount of effort that we're doing on some other things. I'm working on putting together a conference for it'll be a virtual conference, and then my plan is sometime in maybe the winter, February, March, to actually do a live event. Probably Las Vegas is what it looks like it will be, just because it's super easy from where I'm at to get there. Phoenix is fine, but I think that's an easy location for a lot of folks to get to. So look for those announcements as we go forward. Okay, into today's activity, right? We came in last night, NVIDIA report came out, and whoever said it last night, you're absolutely said the market decline will start with this NVIDIA. And boy, it was very climactic, to say the least. Especially the selling was relentless all day. I'm going to show you something on the web flow indicator. I gave you that the other night. I told you to use 21 and 3 as the settings. Absolutely, an hour after London last night, issued a sell signal. I want to show you that because it was spot on. And then those of you, I don't know if I'll be able to show this to you tonight, and I'm going to do my best to potentially to do a live stream to show the indicators like I've done in the past tomorrow. Just follow me on Twitter. It's Portfolio Expert, no E in the expert, just Portfolio and then the X. But this is really, I'm hoping to be able to show that indicator and others at work, and it's really fun. I keep telling you folks about this 5-second chart on the E-minis. It's absolutely insane for scalping, market direction, turns, all kinds of stuff. But hopefully I'll be able to do that. I'll put something out on Twitter tomorrow if it looks like I'm going to be able to pull that off. And hopefully it will. It'll probably be somewhere at the last 2 hours of trading tomorrow. And we'll work on that. So, all right, so let's get into what's going on. Jackson Hole. So we'll come back to NVIDIA here in a few minutes. But NVIDIA definitely triggered a sentiment change just by it declining off its highs. It was unable to hold the highs. That thing, let's face it, it's in the stratosphere. I went through that last night, and I was talking about getting a potential RTX sell signal, all that stuff. We actually had an RTX sell signal on the S&P yesterday, if you recall. So anyway, let me get focused here and get into tonight. Let's talk a couple things. Let's get into talking a bit about Jackson Hole and what the expectations are. One thing I'll tie together here, we got the claims, this employment situation, right? So claims were down 10,000 down to 230. Continuing claims down 9,000 to 1.702 million. And these numbers just continue to be crazy, crazy good. And I don't know what Paul is, my guess of what he's going to say is he's going to stick to the inflation story. I think we're seeing some inflation flare up in Europe. There's some cross currents going on right now that are just really ridiculous, I think, and they're almost impossible to predict. And I don't think the Fed has any better predictive capabilities than any other human. From that standpoint, no matter all the stats that you have. So what I'm looking at is for them to continue, Powell to continue to talk about the inflation, and probably talk about the stable employment. It's going to be the same speech we've heard for months and months, right? It's just going to keep going. And they're not going to get off that path. I'm still convinced that they'll raise another 25 bips in September meeting coming up here in a few weeks. I'm convinced that will happen. Whether that's the final one or not, I couldn't tell you, but that does put me into the range that I talked about 6-8 months ago. We're looking at a 5.5 terminal rate, and I think that's where they get. But and we'll continue to, when I go through the technicals on the 10-year and all those expectations, I'll continue to talk a bit about what those formations and what's being predicted from the standpoint of the algos and other things. And it's pretty interesting what I'm seeing here. So let's go ahead and so the only other thing coming out after Powell talks, and might be kind of interesting, maybe I'll be able to get live. I won't be able to get live when he talks. That's 7 a.m. my time. I'll be busy with some other activities then, but we'll at least be able to talk about some of that stuff. And just know I'm going to be focused on trading aspect, not going through and doing some analysis that will tie together I'll try to put all that together. And I would say there's probably a 70% probability that I'll be able to get that done. So interesting. I want to talk about the market action here for just a minute. Today, on Thursday, we had all 11 of the sectors were negative. S&P down 135, complete reversal from early morning. Nasdaq 187 down, Russell down 127. What was interesting with all this stuff is the banks uptick. So KRE and all those indexes I usually show you, those were all positive. So the banks were interesting, and rating agencies didn't have anything to say about any further bank warnings. We'll see if they come up next week. But I'm anxious to show you what's going on here with the technicals here in just a couple of minutes. But it looks to me that the whole scenario that everybody's built up for is going to be a moot point, meaning that whatever Powell says, I don't think it's going to affect the markets either way very much. Maybe I'm wrong, but I think we've already seen the reaction of what we saw today, and I think what we were seeing today was that relentless selling. Everybody that was optimistic coming into yesterday was as ridiculous in inverse as today was, because we just saw this relentless buying, and they just kept printing all the way up, all the way into the 40-day moving average. By the way, I'll show you. It rejected from there almost perfectly, and like I said, I don't think I'll be able to show you the webs, but if any of you that have been in the live room, this was the classic web top that showed up. It was already off the high, but when it rolled over this morning right off of the open, it was classic. I mean, classic. We got a little rally, and then we got this formation, and it was a really classic formation. So if I do a live tomorrow, which I'm intending to at the moment, make sure in the chat tomorrow that you tell me to show you that formation. It was insanely cool, and I hope a bunch of you caught that. So let's go ahead. Like I said, I'm working on a project that will get these stats to you when they come out, because I think the WaveTech buy and sells that we get every day are really significant. There wasn't anything material yesterday, but it would be really interesting to see, for me to be able to talk about that what happened on tonight's run. I'm not going to be able to do that, but I will maybe bring that up tomorrow as well as we get together live on the screen. And okay, so let's go ahead and take a look at yesterday's run, and then let's get into tonight's video. So we were at 1477 yesterday. We're now looking at 1682. So we did have a few more buys and sells. We had 683 buys, 179 sells. This is not material. We've got to absolutely So do we have an echo again? You know, we do. I know why. The echo will be gone now, folks. So sorry about that. You feel like you're in the stadium. I'm really sorry. I was so focused on my call, I forgot. So anyway, it should be all good now. Give me a thumbs up or let me know the echo should be completely gone. Anyway. I know. Oh, man. At least we have fun on this channel, right? Doing a live, there's nothing better than a live show, right? Okay, so nothing really big here, folks, as far as this goes. The interesting, I think the only interesting thing we're going to see from this is we're going to stay probably well under 28%. Yeah, you're right. Jagan, I should do a mic check. You're absolutely right. And this has every time I'm on Zoom meetings or Teams meetings is why it happens, because I put on the stupid webcam. So anyway, so onward we go. But I don't see anything material here, folks, as far as everything, the rotation we're going to see. I think we stay under 28% on this database for a bit. I think this market got really sick, and I don't think it's going to just rebound out of here. We were talking about those fib targets, I'll show you here in a minute, that were potentially a island projection. I talked about that, and I said, well, we'll find out probably in the next day or so. Well, we found out today on Thursday's action for sure. So so nothing to really expect coming from the database. It's Thursday night, so what I will discuss is I'm going to go over. I'll go over here and we'll go full screen here for a minute. But right now the intermediate database is 64.98. That number is going to come down. I think we could see it as low as 58. I don't think we get much below that. 62 to 58 is kind of the next stability marker, we'll call it, from where it goes. I still think the intermediate trends, there's enough of them as long as we're over 42% to present with some kind of choppy sideways range. And if we deteriorate down the road, we'll talk about that at the time, and which would suggest that this whole thing is over. And I was flashing back even on when I did the interview with Meet Kevin, and Kevin and I are talking about doing another event actually. But when I was with Meet Kevin back in several months ago, I was talking about, well, coming into the third quarter, I think, that's where I see a stumble possibly coming, and that's pretty much where it was. The WaveTech database rolled over several weeks ago, and it did go from almost 82% to 14% in like 4 weeks. It was a big collapse. And so when you see that type of internal collapse, everything was rolling over. So we saw the collapse internally on a short-term basis. What we need to watch for, still talking a little bit about the database here, is on this intermediate, we need to hold this 58% level, maybe 52 max. I don't want to see us get anywhere near 42. If that happens, then we got some really interesting stuff. And then you might hear Bob Kindle getting pretty negative on the fourth quarter. We'll see what happens here, because when not this Sunday, but the following Sunday is when I will be looking at doing the quarterly and doing our update for the quarterly and going through the monthly and doing a longer term analysis as we're coming into the the final month of this quarter, and then setting up ultimately for fourth quarter. So we'll just do that analysis at the time. But this database here is likely to see some decent selling. This is a second week where the markets are down at a level where it's probably going to generate some selling and see a lot of these things come out. So Trader SLA, I will, the 21.3, I'm going to show you that next when we get in there. That's the first thing I'll show you, but that's on the web flow indicator. So, okay, let's go ahead and, it works on ASX, it works on any symbol. It doesn't matter. There's a way to, you just have to bring them up. Anyway, let's go ahead and get into the technicals here. All right, here's the hourly chart. It looks like we're setting up yet another bottom right here. And of course, you already know the answer. We're going to rally into the London opening. last night. If you see up at the top, my cursor here, let's bring this. Let me draw this in because I think this was pretty significant from this standpoint. But right here is the short. This was the buy on the base, and it flipped short. It's still short at the moment. Let's see how well it covers. But if we're looking at this patterns that are set up here, you can see all the PPM 1 is going to come up. The PPM 2 is kind of lazy. It doesn't look like these longer averages are still under a lot of pressure. So what we're seeing here is the 200-hour moving average has a downward angle. So if you're using that average, you're using down at the bottom the PPM 200. That looks like it's trying to cross over first and second derivative, but it's not until Monday or so. It looks like we're probably going to see some rejections off of this 10-hour moving average. Right now, there's a 90% probability that it will stay under that. That will dissipate as this indicator starts to turn up. We'll probably get into the 40% level maybe later tonight. We'll see what kind of setup you get. But the bottom line is here that we're getting that typical bounce after this big thing, or at least it's set up that way right now. We're up a whopping 2.25 on the S&P right now. And so we're just looking at really a moderate rebound, and we're looking probably, let me get this thing off the screen. But yeah, so I just wanted you to see those points. And I have to close this out so I can do something here. Let me get this crud off the screen. Yeah, so this thing is pretty good. I've noticed on the hourly. So let me show you where the settings are here. Down at the very bottom of the Webflow WaveTech market flow. I'm calling it Webflow. It's market flow. Down at the bottom, this 21.3 is a really good setting for hourly chart. And what you want to do with this, folks, if you have these indicators, is you want to kind of fine tune them about every 3 days or so. This setting on the hourly chart has just been golden for a while. But sometimes if you're trying to trade with a 5-minute chart or some shorter term chart, you just kind of want to play with these numbers. There's a couple combinations, and I'm going to put something out on our website that will give you some insight into some of the best values to use there. But that very input 1 and 2 is where you change all that stuff. But you can see, I mean, it was a perfect spot. It was at 1 o'clock my time. This is Pacific time that's on the screen. So that was 1 hour at London. Basically opens at midnight Pacific time. And so it was 1 hour after that open. And it was pretty good stuff there. So, so we look like we should get a rebound. I don't know if we'll get an actual buy off of here, but it's pretty decent if we start to set up a formation. You can see it's coming in. Yeah, I'm just looking here at timing. Yeah, as we come into the open, it looks like maybe we can be challenging the 21 period moving average, and just know that all of these averages are declining sharply. Yeah, so yeah, this pattern should unfold. I still think we'll go to the dailies here so we can get a little more analysis on what's likely to happen. What's interesting is we had that one little blip. It looked like we were going to get a rally. We did. We basically was a one-day wonder. And these values are still, we're going to have to take out this low right here, folks, at 43.50. That's your low. If we take that out, then that will kill these fib targets up here. Okay, for right now, that's going to stay in place. as long as that goes. I'm going to show you something else with the indicators here. You can click on here and show pivots. Okay, so you can see where these calcs are coming from. So you can see these are this calc is coming from this low. That's why I'm telling you that is where you will get. If you take that out, it will kill the calculation. So that's the number to watch for, and that's that 43.50 exactly. That was the number I was calling for as an extreme. It's interesting that we hit that. Well, we tested. It looks like to me this is a pretty amazing formation. Okay, so while we saw the lack of conviction on yesterday's rally, because as soon as NVIDIA started to fade, I mean, that's the only story. If you try to find out what happened on Thursday, August 24th, every story you're going to hear is NVIDIA. That's it. It's even likely that was the scenario that was feeding the markets yesterday. So, but here's what the algos are saying. There's still, if you recall, I was talking about potentially having 2 weeks up. I'm going to flop over to the weekly chart right now, and even though we're down, we're up for the week. There is a lot of resistance. I wanted you to see this. 4476.87 is the 10-week moving average, and you have a minus 0.14 on the PPM. But I want you to look at the high was, we did print 85.80, but we basically rejected off of this downward sloping 10-period moving average. And now the only thing that you have at the moment is that PPM2 is at a 0.27. We're on a weekly chart here at 0.27. And you're looking at that low at 43.50, but we go to the moving average right now. The 21 is 43.43. This is a number that I talked about last Sunday night. And this is going to be, I thought, well, if we printed down to 43.50, we might print into the 40 handle. We didn't, but there's still a shot at this thing. But if we manage to close higher, so what is that number? That number is 43.82 or higher tomorrow. Then what we're likely to see is one more week, but this 10-period moving average may be the cap. And what's possible, we'll see what happens with this Jackson Hole thing. I'm not sure. I don't think it's going to be anything, but we'll find out. And my scenario is that we probably potentially get an inside week on the market. What we're going to watch for, you have the indicators, when we get the update for on Sunday, we're going to be looking to see if the market grid turns up on the weekly. If it does, then that's going to give us a little upward bias, but we're still going to have major resistance right at that 10-week simple moving average. You don't have to get fancy. Simple average is all you need, and that will let you know. So what we're seeing, though, which is why I don't think we get above that, is what we're seeing is that the algos are continuing for the next several weeks to continue to decline. And in fact, they're showing that we're going to get into trend mode down, which starts to lend to another story that I will cover once we finish this week. We see what happens on that Friday, on Sunday's opening, meaning when the futures open on, and we get new calcs on Sunday, we'll start talking about this. But there's a growing probability that we're going to get toward the 40-week moving average in this pattern. So the markets could get a bit worse than what you've already seen. That's a 41 handle right now. And let me just see what this is doing. Yeah, so it's going to be right at 4,200. So this week, like I said, we had a 43.50 low. We could see another, I think the 21 will hold for a minute, but I think we get basically an inside bar is the potential, which means we don't take out 43.50 and we don't take out the highs at this 44.80 44.85. So we trade within that range next week. I don't know if we can get that quite a range. We may, because we're finishing off, this will be the final few trading days of the month. So maybe we'll stabilize a little bit. But I'm thinking that we could get an inside bar here on the weekly. And then that will set up a further scenario that the week after that, as we come into the 1st of September, if you recall, my scenario was we got 3 down, 2 up, 3 down, and this would be the scenario that would take us into this potentially 41 handle. There is fairly decent support here, but we're even seeing PPM2 down here starting to deteriorate a bit, but it's still going to be at 0.15. So this 21 average is probably going to be a valid support area. That's going to be the trigger to watch. We pivot through that, then all of a sudden we take out the 43.50, and then we're looking at targeting a 42 handle somewhere in there. And I should be able to fine tune it if those events happen. My expectation is not for that to happen next week, but potentially the week after that, as we come into September and the end of this quarter. It's going to get really interesting. I'll try to tie this all together on that, not this Sunday, but the following Sunday when I do the longer term analysis from that standpoint. Yeah, Chad, they do really good. We run billions of dollars on this dude. So keep talking. Yeah. Anyway. Yeah, by the way, they predicted this entire decline and all of that. So, yeah, moderators, mute him if you would. I hate smartasses. Anyway, let's just go on. Chad. So here we go. I left the market flow indicator on there. Somehow this indicator predicted on March 13th to buy at, what is this number? 11,806, and actually generated a sell for the open this morning at 14,007. That was, let's see, more than 5 days, Chad. Let's see, from the 13th of March until August 23rd. Imagine that. So I know, I agree. You got to have these guys, though, right? So anyway, it's the internet. You got to love it. But anyway, this is weekly, and you can see there. There's still an amazing upward angle of attack here on the Nasdaq, and and we're just probably not going to get through these numbers, folks. We're still positive 0.51 on PPM2. So we do have some fib targets. I've talked about this before. Fib target 2 is at 14,882, and if we look at the the 21 period moving average is a weekly chart. If we look at that at 14,521, and that is right spot where that fib target's coming in, right? 14,482, 15,521. So that's your range to watch. And we've got, this is a pretty robust number. We know the story here, folks, for 2023. It's the Nasdaq Magnificent Seven. You know, that's what's driving this market. And even though we got a short signal, it'll be interesting to see what comes out of this. But I do want to get rid of something here real quick. Let me turn off these pivots. There we go. Yeah, so we'll see what kind of stuff we get from this. But I really think that this pattern is still very bullish, and it's similar to what I talked about on gold last night. But I believe we're going to get sandwiched in this wedge right here, this rising 21. The flat 10, this is going to be your range to watch. So real simple. That's at that 14,521 with the upward range of 15,271. And that this is setting the tone even more for a sideways market with a slight bias to the upside following this 21. And so we're just seeing the continuation. Let's go over the dailies real quick. And the daily comes in here really noisy. Okay, there's not a lot to look at here. I just want to turn off one more thing. I want to get this. Let me turn that off. Okay, there we go. Just get some of these numbers out of the way so it's a little easier to read. But you can see we have this big turn down on the dailies, and that's continuing. One of the numbers that I talked about the other night here is that pivot number that's being generated by the fib targets, and that is right now at 15,310. Wait, is that the right number? Hang on, I got to get this right number here. 14,970. I'm trying to find it on the far right so I can get the actual value. Yeah, 14,980 is the number. We printed down, this is daily, yesterday, 14,957. On today's action, we printed, let's see here, 14,817. So 14,980. So we printed just a little bit below that. If we close below that, that would suggest some follow through. My expectation here is that we'll see the market grid turn up, and it will start to move forward substantially to get wedged in here. It's a different type of wedge formation than we're looking at the weekly, but I think we get bound right in between these moving averages here. We just stay in this range, grid turns up, and we operate within the grid for a couple of days. Let's go to the weekly Russell, trying to figure this thing out. The algos are suggesting we got kind of a stable, slight upward bias. All the other indices, the S&P and the Nasdaq, still have, on a weekly intermediate, still have an upward bias. Our database is still long at, well, probably at least above 58% tomorrow. So we still have a very positive overall trend, still looking out a period of time. And I'll cover, once we have update numbers on Sunday, I'll cover what the database is telling us on Sunday. And I think that's going to be interesting from that standpoint, I think. Okay, so there's not a lot to talk about other than everything looks sideways and boring and a slight upward bias, and the Russell is going to continue to underperform the other indexes. So the probably only good thing is if we do get a decline in next 3 weeks, if I'm right, if we decline into around 4,200, then this may see a little more weakness. We have some Fibonacci targets down below right now, which are at the moment low target 1753, 1709 is the extreme being down here. But guess what? This is in that trading range that we've been in. Just going out all the way out to May of last year. We're still in the same range. We've just been bound to get up to the top end, and at least the other indices were able to break out of that range, but the Russell has not been able to. All right, so the 10-year treasuries are continuing. This is a weekly graph, so we'll start here. 10-year treasuries are trading up into these fib targets. The targets came out on May 1st, and those targets were 401, 429, and 447. So we've met here just last week. We printed 432.8, so there's your 430 target. This week we've been 436, a little higher, but still under that fib target 3, which is 447. So maybe there's still more in there, but this is weekly graph. It looks like we're going to stay positive. This angle of attack will stay positive, but that's going to do nothing more than represent a bottom end of the target range. So let's come over here to the daily, and a daily's breaking through the 10, the 21. Everything looks like it wants to fade, and my guess, if you took the midpoint between this upper average here at 424, I just want to make sure I got this. Yeah, 424 with the 40 down at 401. You're looking at around 412, 410 is probably the bottom end, and you could draw a line, and we're going to oscillate around 410 up a little bit more, back and forth here over the next several days. And like I said, I don't have any high expectations for Powell's speech tomorrow really doing anything. Doing anything of material, but we'll find out. He might have more to say than I anticipated. Last year he blew the markets up. I don't think we're in a different place. I think he was trying to make a point. He's been pretty aggressive, and as you know, I've given the Fed an A+ on how they've handled everything, because it's kind of hard to argue. Everybody's talking about the recession that never is coming, and they're still talking about it. They're still cherry picking stats to look at. Meanwhile, like I said, this employment situation is just crazy. People are working, and they can come up with all kinds of metrics. The credit card expansion, and then there's the credit restrictions that are happening, and you got the CRE situation. Good luck. And then it's just the high rates. The market and the economy can't stand this. And I think if you average the last 30 years of rates, you probably find they're around between 4 and 7%. This is actually more normal. And my scenario has been that we're really experiencing a normalization about on interest rates, and the market's going to generate where they're going, and that's what we've been seeing, regardless of what Fed speak and anything else that we see. So just just know that these are market set rates now, not market controlled rates by the Fed. And I've been arguing for a while, for probably over a year, that that's what's going on here. They're letting rates normalize. They're getting out of the way. They're trying to fight the inflation with the higher front end of the curve. But like I said, my expectation is that we'll see a normalization across the board where it's just the yield curve goes from inverted to flat. Maybe it begins to steepen down the road, and then maybe there's some issues if we get there. But at the moment, it just appears that employment's just going to continue on, and we're going to have some soft metrics. I mean, look at what happened to some of the retail stocks. They've just been destroyed. And then you've got, it depends on who you are and what you are, because Walmart reported well, Target reported well. But then when you get into some of these specific niche players, we've seen things all over the board, sporting goods getting hammered while, certain clothing folks are making lots of money. And it's just part of a collage of everything that's going on. But when you look at the big players, the Targets and the Walmarts and those guys, they seem to be operating in and actually giving good forward guidance. So that's probably what we're seeing on all these charts, and stability and forward. Because if you look at the algos here on the 10-year, there's nothing really to look at. Let's just do a quick glance at the 2-year. It's interesting, if you remember the 2-year, this is the daily, was looking a little flat, and now the algos are updating, and angle of attack is starting to increase again here. We did see the 10-year at 502 on the close, 502.23. That's actually a live quote from right now. So yesterday we finished at 502.25. So we're down just a touch here right now. But it looks like this angle of attack, the bottom end of this thing is 496 is the bottom end. Don't see anything, basically nothing to see here, but it does look like we have an increasing pattern. The one thing that is interesting, though, we have stable pattern going forward, and these projections will change substantially as we get further out. These are way out in the future, but it does suggest that we're going to see yields start to decline with it. I don't think they get to 3.4, but I do think we probably see them into a 4 handle, maybe a 390 or something is possible, just the way things look. But probably this bottom line here, which is the 40, this is the weekly 40-week moving average, is at 453. That's probably a more realistic bottom end of where this pattern is likely to stay above as we come into the final month of this quarter and start the fourth quarter. Yeah, John Underwood, I would agree with you on that. Absolutely. I think that, who wants to go to a store anymore? Not because it's fun to go, but not fun anymore, depending on what city you're in, that's for sure. So let's move on. Let's go to crude oil. I think crude's interesting. I think there's still some downward, this is weekly, some downward pressure. It should be limited. I've been harping on this number for weeks. When we were trading up around 85, I thought we could pull back into 77, maybe 75. That should be about the extent of it. It's possible that we roll a little lower than that, but I don't see it for a while. So I think we probably stabilize here, 70, 75 extreme, around 80. I don't see anything really changing in this market anytime soon. And I think I guess we can call it close to ending. A lot of schools are already back in, close to ending the summer driving period. So I don't think there's a lot to talk about here on crude oil from that standpoint. Let's just move on to gold. So I want to blow this up because this is the scenario that I was talking about here. I'm going to bring this down. Here's another one of those little wedges, and it's interesting, especially when they start to tighten up here. This is going to be your range. We're almost up to the, what is this, the 10-period moving average, which is right now at 1950. We printed 51.30, last trade 44. So we printed right up there. This is a weekly chart we're looking at. On the downside, we printed just below that 40, which has been a number I've been watching for a while. The low's been 1913. That 40 average is 1924. So we printed below it, bounced right off of it. But it's interesting because I think that the 21 is rolling through this pattern. It's somewhat unorthodox when you get this crisscrossing pattern of being we'll say expert in understanding moving averages and configurations. When you get this, there was one previously. If I bring this over here, you see where the 21 was the highest, and it rolled through the pattern, and we did get a fair amount of declines. And it looks like to me, though, this pattern is a bit different in that we may potentially get down into the lower end of the grid, but my expectation is we come into next week that the grid turns up. And if that's the case, then we could see printing up towards that 21, which is as high as 1972 range, something like that. So gold just stable, holding support levels. There's no way Peter Schiff's going to get happy in this environment. So Bitcoin's having fun being pretty correlated with the market. This is a weekly chart. Let me get the values up here so we can see them. Yeah, so we're looking at right now high 26.8, 25.530, low. We've got those fib targets down there. Fib target 1, 25.539. We hit that. It looks to me there's some further weakness coming here, but this 40 period is enough to hold it. It's currently, it's at a plus 0.9. Let me get PPM3 1.07. So that doesn't look like much of, let me see if I can blow this up so you can see this most recent pattern here. That angle is pretty substantial. That suggests we should hold that fib target. We should hold this 40 period moving average because it's up at 1.07. Actually, I'll get this right. PPM, first derivatives 1.076. That is the, I'll get it right yet, 0.99. It's, so yeah, just know that that is a pretty positive number from that standpoint. And the probabilities are in the upper 60-70% range that we hold that value of that moving average, 25.083. So I must have spent weeks talking about the downward target of 25.5. We printed there, and now it's probably maybe adjusted to around the 25,000 range. That should be the bottom end of this target. Okay, folks. Sorry, I had to rearrange the room here to come back up. Anyway, man, another week. Unbelievable. As I told you, there is a potential that next Tuesday will be disrupted. I'll let you know. I probably won't know until Monday when we do the stream. It's possible I'll know before then, but I'll let you know on Sunday if it is the case. But it may be an impromptu. I'll have to be out of town for on Tuesday potentially. So I will let you know the best I can. But my plan is to be here every day. No, I don't think I said that, James. Just looking at a couple comments here. Yeah, the high today was 44.85. That's the weekly high. Not, I don't think we did the calcs. I hate to do this right now, but let me just. I don't think I went through the expectations for the market grid, which I usually do. So let me just go ahead and sorry for you guys looking at the side of my head. So yeah, market grid for Friday. S1 is 87, R2's 24, 44, 24. I don't think we get crazy and print back up into 44, 44, which would be R3. But we've got this volatility kicked up based on what happened today. So look S1, S1, R2. I don't think we break 87, but we could. Like I said, the key number in the pattern right now is 43.50, which is the weekly low. And I think we set up the scenario that I painted earlier is that we set up an inside week next week, but that's subject to change. We'll see what we get tomorrow, what kind of activity, and see what kind of action we can get. So as always, folks, appreciate everybody coming and hanging out in the streams. And it's just hard. It's just hard to believe sometimes how fast the weeks seem to go. And I know that's it's just crazy. And so good luck trading tomorrow. Like I said, my plan is even the last. I'll probably come in for about an hour. I won't have the ability to stay on any longer than that. So I'll even come in the final hour of trading tomorrow, or maybe around 2 p.m. Eastern time. I'll try to do a live stream. We'll be focused in on using the indicators intraday. And I figured out a few things on how to use TradingView. I'll be able to do a much better presentation than I did the last time. So anyway, folks, thanks again for watching. Have a great weekend, and I will hopefully see you tomorrow. All right. See you later. No problem, Bo. Be safe out there. You might run into my brother. That's where he's at right now. Oh. Omaha. great weekend, everyone. Hopefully I'll see you tomorrow.